Hey everyone, welcome back to Corporate Decoder, the place where we take a deep dive into the nitty-gritty of corporate filings and see what secrets they hold. Today we are dissecting the latest filing from the RoyaLand Co Ltd, and let me tell you, it is a royal affair with a few surprising twists. Before we dive in, if you love getting decoded insights from these financial reports, make sure you are subscribed and hit that notification bell. We also have a growing community over on our Discord server linked in the description below, so come join the conversation. Now let us get into it. The RoyaLand Co Ltd is essentially preparing for a big launch with its online and offline immersive royalty-themed experience called My Royal World. At its heart is a mobile game called RoyaLand. They are serious about building digital avatars, virtual land, and all sorts of in-game content. What makes this company stand out is its connection to royalty. We are talking about Emanuele Filiberto di Savoia, the grandson of the last king of Italy, and affiliations with 7 other royal families from around the world. They are positioning this as the first historically inspired monarchy-based massively multiplayer online role-playing game. Think of it as a blend of history, fantasy, and gaming, aiming for a global audience who are interested in the world of royalty and immersive entertainment. The company is in the middle of developing RoyaLand and My Royal World. They have partnered with a company called Neosperience SPA to handle the game development using advanced technology like artificial intelligence to make the game environments and characters more lifelike and the gameplay dynamically challenging. Neosperience has apparently completed a playable version of the game, which is a good sign that development is progressing. They are also planning a pre-launch augmented reality companion app, which sounds like a smart move to build hype and potentially generate revenue before the main game is out. This AR app could also tap into the growing market of gamified tourism, encouraging exploration and interaction with real-world locations. Looking at the financial side of things, however, it is a different story. For the fiscal years ending the 30th of June 2025 and 2024, RoyaLand reported 0 revenue. This is not entirely unexpected, as they are still in the development phase for their game. However, this means that all their expenses are bleeding cash and they need significant funding to keep going. In the year ending June 2025, their product research and development costs were around $277,364. And for the year ending June 2024, it was about $413,532. So they are spending money on developing the game, but it has gone down slightly from the previous year. Their general and administrative expenses were $497,231 in 2025 and $600,021 in 2024. This is a decrease primarily due to lower legal and accounting fees. They spent less on getting ready to be listed on a trading platform, which makes sense. This all adds up to an operating loss. For the year ending the 30th of June 2025, the operating loss was $774,595, and in 2024 it was $101,3553. So while the loss did decrease, it is still a substantial amount of money given they have no income. Ultimately, this results in a net loss each year. For 2025, the net loss was $774,023, and for 2024 it was $1,017,390. The company is burning through cash and has an accumulated deficit of $2,863,410 as of June 2025. Let us look at their cash situation. As of the 30th of June 2025, they had $226,782 in cash, and at the beginning of that period they had $261,476. So their cash balance decreased over the year. This decrease in cash is mainly from their operating activities, which consumed $577,281 in 2025 and $825,145 in 2024. They are spending more than they are bringing in, which is normal for a development stage company, but it does highlight their need for capital. Thankfully, they have been able to raise funds through financing activities. In 2025, they brought in $543,359 through financing, and in 2024, it was $951,252. This cash is coming from selling their shares. They sold quite a bit of stock, but it has not translated into profit yet. The net loss for the period of the 29th of November 2022 to the 30th of June 2023 was $647,751. And for the 1st of July 2022 to the 28th of November 2022, it was only $23,012. This shows that even though they are burning cash, they are also trying to manage their expenses, though it certainly is a large sum for a company with no revenue. Now, this filing also mentions that their Class A common shares have a par value of $0.0002, and their Class B common shares also have a par value of $0.0002. This is a very small nominal value, which is common for companies that have a lot of shares outstanding. If we look at the consolidated balance sheet as of the 30th of June 2025, we see a total shareholders deficit of $319,015. This deficit is mainly driven by an accumulated deficit of $2,863,410. This means the company has lost more money than it has made since it started. Their current liabilities are $556,327 as of the 30th of June 2025. This includes things like accrued legal and accounting fees and consulting costs. They have enough cash to cover these short-term liabilities, but it is close. Now let's talk about the risks, and there are a lot of them. The most significant one is that their independent registered public accounting firm has expressed substantial doubt about their ability to continue as a going concern. This is auditor speak for they might go out of business if they don't get more funding. Then there is the dual class share structure holders of Class. So shares have 20 votes per share, while Class B holders have only 1. This means a few Class A shareholders can control the company even if they own fewer shares in total. This could limit your influence as an investor. Your Class B shares are quoted on the OTCQB market. This is not a major exchange and there has been very little trading. This means it could be hard to sell your shares and the price might not reflect the true value of the company if it ever develops. And importantly, for investors hoping for income, the company has never paid dividends and has no plans to do so anytime soon. You will not be getting any regular cash payouts from this investment. Now, for my take on the RoyaLand Company Limited, the concept of a historically inspired royalty-themed MRPG built around royal families sounds very unique and potentially very engaging. If they can deliver on the gameplay and marketing, especially using their royal connections, they could carve out a significant niche. The AR plan is also a smart way to build community and brand awareness early on. However, the financial situation is precarious. They are burning through cash with no revenue, and the auditor's going concern warning is a major red flag. The dual-class share structure also raises concerns about investor influence. The risks are substantial, and the company is relying heavily on future funding and successful game development. Their success hinges on executing flawlessly on multiple fronts with limited resources. It is a high-risk, high-reward scenario. For now, it remains a concept with potential, but still a long way from proving its financial viability. What do you think about RoyaLand Company's ambitious plans and their current financial standing? Let me know your thoughts in the comments below. If this breakdown was helpful, please give this video a thumbs up and subscribe for more corporate deep dives. And hey, check out that Discord link in the description to keep the conversation going. Thanks for watching, and I will see you in the next one.